Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for April 23rd, 2021. Well, my goodness, yesterday we suffered another nasty little whipsaw in the market as it was revealed that President Biden intends to propose a doubling of the capital gains tax. No surprise that the market doesn't like that very much, and we saw some pretty substantial selling, but it really didn't break us down. So what does that mean for today? Well, let's settle in, buckle up. Let's get ready for the Friday edition of the Morning Market Prep video. Good morning once again, everyone. Hey, how about we take a look at these technicals, take a look at these charts, and see if we can glean some information from that on how we might want to approach the market for today. Obviously, this has been a rather turbulent week, and I've been mentioning the danger this week of these big point swings, and hopefully it hasn't harmed you or your account as we've been whipping back and forth. Now, obviously, this is largely news driven, and you can see that if we take a look at this Dow chart, we're looking pretty good overall. Depends on where you draw that trend, how this might look to you, but holding up very, very well. But clearly these 300-point swings that we're experiencing in these days this week has really elevated the risk level of the market and raised some uncertainty for retail traders as to what comes next. So the question for today is, with futures trying to push up this morning, will we see a rush back in today? Will we whipsaw it back to the upside? Or is there that possibility we run for the doors heading into the weekend and reduce some risk? Who knows? Buckle up, right? And stay really, really focused. Stay on your toes watching this carefully. One thing I would like to caution everyone on is to be a little bit careful with the idea of just chasing back in. Because remember, next week we're going to ramp up in a big way earnings numbers, and we're going to hit the majority of those big techs tomorrow. About 40% of the S&P market cap weight will report next week. So that could move us around substantially. And again, we should probably expect this wild volatility to continue. Let's take a look at our support here in the chart. Notice that we've got a pretty good support, and although yesterday we saw some selling, that selling came in and it came in pretty darn strong, we were able to hold in on that price support in here. So I think we're okay as long as we can hold. However, if we were to get a bearish push today, and you can't rule that out with the whipsaws that we've seen in the market, then we're going to have to watch this area pretty closely if we start giving up this pretty steep upside trend and that support. That could be a little bit of a problem, and that means we might dip or could run the risk of dipping down into here, which is another very large point move. So be a little bit careful with that. Now, also keep in mind that if we do find a reason to rally today, that we have that resistance high up here that continues to block our upside moves for a new record. So let's watch that closely. If we can breach that level, then hey, maybe blue sky above is all we can see. Let's take a look at the SPY. Now, SPY, I mentioned early this week, carried a significant risk of these kind of whipsaws and pullbacks because we're so far extended away from any strong level of price support. Now this week we're trying to build a little bit of price support, but these whipsaws certainly have raised an awful lot of tension in the market and continue to concern me that we could still see pretty substantial price moves over the next week, particularly as we ramp up earnings. So let's watch this closely. We're trying to get some bullishness going here this morning in the pre-market, but just keep in mind that it's not out of the question that we could see a little bit of selling going into the weekend just to reduce risk because of this volatility. So just keep a close eye on that price action and don't overcommit one way or another. Again, I continue to repeat this over and over and over, and I know I apologize that sometimes it seems like I'm a broken record, but try not to over trade this market. These whipsaws are very, very dangerous for the retail trader, and we could wake up one morning next week with a massive gap up or a massive gap down, and you don't want to be left holding the bag on a whole bunch of trades being stopped out on everything all at once. So watch that close. So keep a close eye on that. If we can start building this support level in here, it may be just nothing more than a resting period that the market needs to go through heading out here toward trend. Let's take a look at our NASDAQ. Now our NASDAQ continues to show a little bit of issue. Remember, we popped above that price level, and we tried to recover that yesterday as support, and we gave it or the day before yesterday, and we gave it up yesterday as support once again, and here we are trying to push up again this morning. So will we be able to break on through? Will we be able to hold on to that support? That's going to be the question of the day here in the NASDAQ. Can we push on through? Watch that closely. If we were to break on through, we may be in pretty good shape. If we follow through to the downside here, breaking down through there by the end of the day, that could be a little bit of problematic because there really is nothing under here for price support that is really substantial. We could try and grab onto a level right in here. As you can see, we've got a little bit of price action level right in there. We could try to grab onto that, but if that doesn't hold, just keep in mind we could pull all the way back down into this area. So just watch that close. Our trend is so steep that we have a long way to go before we even can contact our trend. Let's take a look at IWM. Now IWM surprisingly was the stronger of the indexes yesterday. Although we had started up during the day, that kind of whipsawed back down. We ran into that price resistance here, in that we were seeing some a little bit of love coming into the financial sector and some into the energy sector yesterday, but doggone it, that news yesterday really kind of dampened spirits pretty quickly, and we have fallen into this wedge again. Let's watch that closely. If we reject this upside resistance here, that could be a problem. So just keep a close eye on that. We need to see this pop out, hold that area as support to really start gaining some confidence, gaining some support levels in that Russell index. Let's take a look at the VIX. Now the VIX has certainly gone through an emotional roller coaster this week as we kind of wring out retail traders' emotions with all of these news-driven events. And notice that we rallied up here and we came really, really close into the price resistance of that area in the VIX, but we overall are still maintaining this downtrend. So I think that is still bullish for the market. We're holding here below that 20 handle, and we need to see that continue. Now with the markets trying to push up a little bit this morning, trying to shake off this taxation news, keep a close eye on that. If we were to really fail here, that could be very bullish for the market. If that fear really begins to drop out and we start to sink back down into these levels. However, if we do see fear continuing to creep up here and we break through that downtrend, and I think we have to get up through this price resistance in here. If we break up through there and were to hold that as support, that's where some real problems or some real selling could come in. So just keep a close eye on that. We're dancing around that level that we're going to have to focus on pretty closely. Let's take a look at our T2122. Now T2122 did pull back a little bit yesterday, but what's kind of surprising is even though we sold off as strongly as we did yesterday, notice that we really didn't give up a lot here on T2122, which means we are still relatively elevated on this indicator, and tells us that we're still up here in this bearish reversal zone up in here where we could see a problem. And with the futures trying to push us back up this morning, we could easily be popping right back up in here into that bearish area where, well, we seem to be struggling to find buyers. So watch that closely. Don't be too surprised being elevated up here that even though we're trying to shake off this news of taxation, that there still could be some downside heading into the weekend. So just kind of keep that in mind, that there's a high risk of chasing stocks at this point in time in the market. Let's take a look at our T2101, and I got to tell you guys, this continues to be a concern as we continue to try and press and press and press and press and reach for new highs and reach for new highs. We're seeing the breadth of the market continuing in this downtrend and really sharply declining this week. So we're not getting that follow-through participation. We're going to have to watch that pretty closely. Perhaps we can catch some support soon, and perhaps those earnings events next week can help inspire the bulls to come back in, but let's watch that carefully. Then let's take a look at our economic calendar for today. Now, our economic calendar, we have a couple things we're going to want to pay attention to today, but our earnings calendar is a little bit lighter today, so may not be quite as news driven today. We'll have to watch that carefully. Kind of keep an eye. We have the PMI flash. They're expecting that to come in bullishly. And I think it's kind of interesting. Consensus is suggesting that the new home sales will come in stronger than the last reading. Now, with mortgage applications continuing to sharply decline, that may be a little bit of a stretch. So it's possible we could miss on that number. Keep a close eye on that. New home sale or home sales have been getting a little bit sluggish here with prices and everything going up due to lack of supply, due to material costs. We're going to have to watch that pretty close. Keep an eye on that guy. Then let's take a look at our earnings calendar today, and we do get a little bit of a break today on the earnings calendar. Let's call it a lull before the storm, because next week it's going to get nutty. Let's take a look some of the notables today. AXP will be reporting. Looks like they have maybe disappointed this morning with that pre-market candle showing some bearishness, pushing down, and that possible rejection of this high. We've tried several times, and now evening star pattern could come into play. Now, obviously, what's actually going to happen is we're going to gap down at the open here, but keep a close eye on that. Not exactly the bullish pattern that we would hope for. Let's take a look at Honeywell. HON reporting today. It's doing exactly the same. Kind of reversing to the downside, still holding up in a big upside trend. We've got some price support in the chart, but obviously that's probably not helping matters this morning, so watch that closely. And then let's take a look at KMB. Kimberly-Clark will be reporting today, and oh my goodness, looks like Kimberly-Clark just jumped out of a window here. This has been looking really good, rallying very nice, ran into some price resistance here, was struggling around that price resistance, and wow, getting thumped pretty hard here on that chart. So be real careful here. RF reporting today, Regions Financials. Looks like this is doing the best this morning of those notable earnings reports. Popped up a little bit, but we're pulling back, and just keep in mind we have this little downtrending pattern showing up here, so watch that closely. And then last but not least, I've got Schlumberger on the list. Looks like it's trying to hang in there today, but this has been in an obvious downtrend overall. So a little bit of pressure here on those earnings reports. So let's hope we get some inspiration in those economic reports to help move us along. So with that, everyone, hey, How about we look at some stocks that could be setting up? But if you give me just a second, if you could do me a favor and help me out here. If this is the first time you've seen these videos, make sure you click that subscribe button on YouTube. And also click that bell icon when it pops up so that you can be notified every time I post a video. Please keep in mind, guys, the purpose of these videos are not to add to the hype and the drama or things like that in the markets. It's to really look at the technicals of the charts and help you help me visualize how I want to approach the market for the day, to control my emotion by looking at the technicals of the charts. And if you find these things to be helpful for your trading, please do me a favor, click that thumbs up button and also leave that brief comment. And I also want to say thank you so much to all of you folks who have been taking advantage of the Buy Me a Coffee link, helping me or helping to support the channel. You guys are awesome. Thank you so much. I truly, truly appreciate it. So let's take a look at these stocks setting up. And remember, guys, that these are not a recommendation to buy or sell any security. And you need to focus in on these chart patterns, make sure they fit your risk tolerance, make sure you understand how much risk there is in the trade before you enter the position, and never ever blindly follow someone else's trade ideas. Let's take a look right here. We have a pretty good pattern here in Bloomin'. Bloomin' has been banging around here, trying to get moving. Notice we're holding on this little upside trend here, banging around here, trying to move through. Unfortunately, we have a problem. We're going to see this a lot over the next few days, and that is this is going to report earnings next Thursday. So whether or not you want to jump into that or not, I don't know, but that is a beautiful little chart setting up in Bloomin'. Let's take a look at McDonald's. McDonald's also beautiful little consolidation pattern in here after breaking through this major resistance area. But once again, we have that issue here where we're going to report on Thursday. Thursday is going to be a big day with well over 200 companies reporting. So just make sure you're paying attention to those earnings reports before you jump into trades, because they can be really, really punishing. If we saw that in Kimberly-Clark this morning, if they happen to disappoint. Remember, these stocks are so extremely elevated, very high PE ratios in so many of the stocks out there that if they miss, they could stumble really, really hard. So watch that carefully. Take a look at Clorox. Now, I've been watching Clorox here pretty closely, and it is going to report on the 30th. But take a look in here. We tried to get moving. We kind of faltered in here. With the volatility that we've seen in the market, but we got a nice little boost here this week, popping right back up, and now this little resting pattern coming into play. So I want to watch this closely. There is that possibility that Clorox could gain some ground here and maybe seek out this new resistance level to the upside. I think it'd be a good idea to keep an eye on Target. Now, Target's going to report on 5/19, so there is a little bit more time in here. And notice Target's been acting pretty darn responsibly here in its price action, not the big whipsaws we've been seeing in the overall market. And although we had a little bit of pressure yesterday on that chart with that selling wave that came in, let's watch this close and see if engaging this trend and this price support in here can come into play, and we could see Target maybe start to move on higher. Keep a close eye on that. I think we should be keeping a close eye on Lululemon. Lulu got a big boost here and pushing up nicely. You can see I was alerted right here on that chart on this nice little pattern, breaking the downtrend, holding into this uptrend, looking beautiful. Any rest or pullback now sets up an opportunity here in Lulu. I think I would be really remiss if I didn't mention some of the precious metals today. We had a good rally this week. Let's take a look at GLD. Gold, a good rally, and then we pulled back just a little bit yesterday. Let's take a look in here. Notice that we've broken through some resistance, and this morning we're trying to see a little bit of bullish price action coming into GLD. We've got we've got bonds trying to inch up this morning, and that may be creating a little bit of response here in gold. Keep a close eye on that gold related stocks, miners, Barrick Gold, Newmont Mining, AUY. Take a look at those companies. They're all in good patterns. And when you look at this chart, notice that we've broken above our 50-day moving average. This is what we call a rounded bottom breakout pattern, and it is typically a very bullish pattern, and the upside target ultimately is the 200-day moving average. So watch that close. Gold starting to pick up some ground and look pretty good here. We should also take a look at silver. SLV is also perking up here, and we blasted through a couple of days ago. We blasted through that 50-day moving average and then pulled back yesterday. And let's take a look. As you can see, we're trying to push up a little bit this morning in that price action. So watch that closely. It's hard to know exactly what happens here next, but I'm starting to see some bullishness really starting to show up in these precious metals, and you may want to keep a close eye on those. There may be some opportunities in here. You might want to keep an eye on food-related stocks. Food-related things have been really strong lately, and let's keep an eye here on Kroger. Now, Kroger's been dancing around a level in here, dealing with some price resistance in the chart, but let's notice this upside trend. Food-related stocks have been holding up very well, and we'll want to keep an eye on that if that can finally perk on out. Watch that one closely. I think we should also be keeping an eye on some of the beverage companies. Let's take a look at TAP. TAP is all kinds of set up here. We just need a little bit of bullish move in that chart. Nice little upside trend, nice little resting pullback, holding on to price support and trend. We just need to see those bulls step in here and try to push that up. Keep an eye on that. If we look at STZ, Constellation Brands, we also have some of this bullish aspect in here, but we still have this resistance level in that chart. So keep a close eye on that. We could reject up here, but if we can pop through and hold, there may be some upside opportunity there. I also have to continue to bring up stocks like Coca-Cola. Now, Coke rallied up here, testing resistance in the chart. You can see we may be backing off a little bit from that this morning, and that would be normal after such a strong run up. But if we can just rest or pull back in here, hold this area, that one should be on your list for the potential of more upside in the market. And PepsiCo has already shown that willingness to break through that resistance, but at least, this thing changed the tool on me here. Apologize, guys. So we broke through this resistance in the chart, and now watch this in here. If this can rest or consolidate out in this area and continue to extend on higher, so keep a close eye there. So with that, everyone, hey, I want to wish you all a fantastic day in your trading, and hopefully you all have a wonderful weekend ahead. I know I'm excited about it. Spring is starting to show itself here in my neck of the woods, and I am excited about that. So I want to wish you all a fantastic weekend. Have a great one, and we'll see you right back here bright and early Monday morning.